share my screen over here. Okay. So this is I'm picking my trades based on fundamental analysis, and this week my focus is actually on the Aussie yen, which is pretty similar to last week for those of you who joined me on my Sunday fundamentals as well. It does take some time for currency pairs to flow, so a couple of things. Okay, so let me leave the contract. Okay, so what I do is, kind of look at the overall data on the Aussie yen, but there's a couple of things that's interesting that's happening right now. So if you look at the Financial Times, what's happening today, or about 2 hours ago, there is a election going on. Okay, what they call this election is, let me show you over here. So they are naming this. Let me see. Let's go to this week. So what's happening today is called upper house elections. Now, the upper house elections, they're about to have an election happening right now as we speak, and it's and how the people in Japan actually feel is that they feel they are in an economic crisis caused by high inflation, and if I open this, and high inflation and bond yield. So this is the general sentiment of whoever is kind of staying in Japan, right? So and it is a little bit concerning because it means that the Liberal Democratic Party, which is the current ruling party, might potentially lose seats. So that's why this news is a little bit more interesting this week. It's not like an election and then the usual party just stays on. So the ruling bloc is kind of facing a potential change in power. So what are the impacts? So the competitor is called Sanseto, right? So what's going to happen if Sanseto really does win, and what are their policies for the economy as well as the and how that in effect will affect the currency value. So a couple of things. Now, Sanseto is a little bit more, they call it right wing. So they want to increase spending. They want to focus on tax cuts like almost any other opposition party, right? And what this might happen is they might cause the Japanese government bond yields to increase. Which will cause a higher debt. Now, if you think about bond prices for Japanese bond yields, if they do increase, it equals to a potential of increasing in its interest rates, right? And then with the increase in interest rates, increase in bond yields, there is going to be a potential of a further decline of the Japanese yen. But the funny thing is, in this article, you guys can go Google this article from the Financial Times. The thing that a lot of people are not happy about right now is that Japanese currency is not strong enough. All right. So if you want to talk about Japanese yen, the Japanese currency, let's just look at the dollar yen. Now, in the dollar yen historically, so I'm going to go to a weekly time frame over here just to share with you the historical levels, right? So historically, if you look at the grayed out parts, historically, Japanese yen over the last at least 20 years from 1998 to maybe 2018, before COVID, the Japanese currency has enjoyed a certain strength at about 1.130 and below. Right, at 130 and below against the USD, it's facing what we call a power currency where imports into Japan is considered cheaper as compared to, for example, now, and exports will kind of enjoy it as well because the Japanese currency is doing quite robustly. Now, post-COVID, you have the 2022 inflation crisis, etc., all the way till now. The Japanese yen has been living in the space of above 130 to even almost 160. Let's call it 150 as a nice median. So when prices are around this median, it means that for a prolonged period of time, the last 2-3 years, the people's not quite happy because being a weaker currency in terms of earnings, import earnings, it's going to be considered like not as robust, right? And if you look at the chart, potentially, despite the weakening USD, right? So USD has been weakening for a little while, and it's quite interesting because despite a weakening USD, the Japanese yen continues to weaken, right? Continues to weaken. So you would think that if US dollar weakens, the rest of the world would get a slightly stronger in terms of its currency strength. But with USD weakening, on top of that, the Japanese currency still weakens along the way. You can imagine if you are, if you're running an import-export company in Japan itself, it'll be a bit frustrating because the currency it's not doing as well as it should have been. You're not earning as much as you should have been. Plus, on top of that, inflation is also quite high, almost 3%. I think inflation right now is about 3.3%, which is still one of the highest it's higher than the US. I think 3.3%, the only country that's higher inflation than Japan right now is the pound. All right, every other major, minor currency has an inflation that is below 3, and Japan still has inflation above 3%. So you have weak currency, you have a weaker currency, you have higher inflation, and basically you have an election going on. This equals to potential downward pressure on the Japanese yen is kind of losing its luster. So my pick for a weak currency in this next, at least medium term, is the Japanese yen. Now, what currency I would like to pit it against would actually be the US dollar. Now, sorry, not US dollar, Aussie dollar. Now, Aussie dollar, so the currency I'm actually looking for this few weeks at least will be the Aussie yen. Now, the Aussie yen, Aussie's interest rate currently is 3.85. All right, if you look at trading economics, and you kind of compare, where is currency at? It's about 3.85% interest rate. The economy, it's not super well. It's still hovering above the zero mark at about 0.2 in terms of GDP, right? But inflation is a bit more controlled, 2.4%. Unemployment, I would say, not super fantastic. It's still a little bit on the high side at 4.3, right? But if you look at the overall picture, one thing that is supporting Australia's potential strength is that the Chinese economy is also doing a little bit better. So despite the tariffs, so China's economic outlook, despite the tariffs, is still a little bit mixture of positive, negative, which means China's data is still quite okay, right? Despite the tariff, you would think that it's going to be a major slowdown, but China's still struggling, is still going okay. And again, I think I mentioned this before, if tariffs are going to be, if China is going to be heavily taxed on anything going to the US, they are going to find other open quotes friends to do business with. So we'll see whether China manages to pivot in a positive way. Another reason why I'm picking Aussie yen, very simple, is my trades usually take a bit of time to build out, which means I like to buy and hold, right? So for fundamental trades, buying and hold, because fundamental analysis is based on at least medium to long term. It's not a day trading stance. Aussie yen is very nice to do it because it's got a decent positive swap. So this is a JDR Securities. Please note that if you're having a different broker, they might have a different swap fees, right? So for JDR Securities, which most of us are on, the swap for Aussie yen is still positive on the long side. So which means that what I can do, I can actually choose where I want to enter, price points that I want to enter, and hold the currency a little bit longer. So it's really a buy and a whole swing trade in a way where I'm okay to hold this for a couple of weeks at least. So the two price points I'm looking at is 95 and 96. 96 has been hit, I think, on Thursday. Okay, so Thursday, we just about kissed 96 and then it headed back up over here. Now, I don't know whether this will give me another retest of this level, but two options that I was actually previously looking at was either, hang on, let me get a proper pen out. So I was looking at either price, okay, it was coming down here. If it breaks through, I was looking at a bit of support on the 95 level before it goes back up, or it came to 96, which is, didn't really quite get on to 95, which is also a good place to buy. Now, I wouldn't buy here right now because it looks a little bit, heavy on the top side here, just looking at price action, right? So I think buys at 96 or 95 would be a comfortable level. Anything below 95, I will be cautious about it because it means sentiment has changed that way. All right, but if we can find a way in at 95, 96, or maybe 96 area-ish, where I intend to hold this is at least TP number 1, at least to a 98 level conservative TP. This is where the previous high level is. I don't think it will really shoot to 101 unless there is major policy changes. Then only we can look at this, but higher probability that it will hit 98 first. It might do this similar thing. It might just fluctuate here a little bit and then hit back down. So this is the range I'm looking at in the medium term, at least for Aussie yen to live in. All right, so let's see whether we can, pick up buys over here, pick up buys over here, but this is where over a medium swing range, I would like to see the Aussie yen in. Yep, so that's all for me. Focus for fundamentals is potential strongest Aussie, potential weakest yen. So Aussie yen has a good swap, and that's where I'll be focusing on in the next couple of weeks.
Alexis, I think Andrew has a question for you, or is it for me?
Market defies technical and seasonality data in the, okay, so Andrew's question, market defies technical and seasonality data last 2 weeks. So what is the opinion? Now, seasonality data, okay, to understand seasonality data is really simple. Seasonality data, where does the data come from? And I think Lloyd can help me confirm that it takes historical seasonal means, seasonal means historical market patterns over the last if I'm not wrong, Paul uses 23 years, something like this. All right. Now, the question that's happening now is what has changed? The season has changed. We are in a new season of tariffs are no longer the same, right? So how the seasons of currencies change, it changes because there's an import-export season, right? On some seasons, you're going to import more rice, for example. Then some season, you're going to import more oil in the winter, etc., etc. So seasonality is not super the best right now because there's a change in prices in terms of tariffs, which means market has changed a little bit more drastically because of Trump. So you will expect seasonally data to not really be in line because people are looking for alternatives. People are looking for alternatives to increase tariff prices. So if it doesn't follow seasonality, it kind of does make sense. There will be a very weak seasonality. I think the seasonality will be a bit weaker. I won't say it totally won't follow, but it's going to be a weaker reference for now as the market is trying to figure out where are they going to segue into, right? You got higher taxes. If this is so expensive, you're going to find alternatives. Cannot find alternatives, then no choice. If people realize they can't find alternatives, then seasonality will stick. But if they can find alternatives, which is a global market, then seasonality's data might be a bit weaker. So that's my take on seasonality data, at least.
I think from a technical perspective, for those of you who identify as a systematic trader, technical traders, we are on the losing end at the moment compared to Alexis who trade fundamentals. People who trade based on actual market price action at the moment, they are on a stronger, have a better ground compared to us system trader. Because what I have to agree is that Trump tweets, Trump any kinds of technical we are having at the moment. His tweet unfortunately does move the market. So seasonals, I think at the moment, and most technicals at the moment would take a back seat, simply because we are so reactive. Yeah, seasonal work best when all is calm. There's no doom and gloom. Yeah. So hence I would say at least the better traders that I've encountered all is preaching be a bit more conservative. Don't be too aggressive. Yeah. So unless you don't strictly rely on the systematic trades, then you can actually react faster. Yeah.
It kind
Now,
of does make sense. So I think actually price action is slightly more favorable right now because if we talk about systems favoring a trend, a range, a breakout, we don't really know which is what at this point because markets are really, really very in flux. There's a lot of question marks out there.
all right. So actually now we are gonna a bit off tangent at the moment. So it's just I would say I'm not gonna say it's a nonsense discussion, but it's just off the head kind of impulse discussion I'm gonna have with Alexis. Is that let me share my screens. There where I have. So I was just have a random check with Alexis that I think USD SGD will reach parity, as in one USD is equals to one SGD. And I actually do favor this view. Of course, I'm not saying that it will happen within the next 1 year or even the next decade. But I think that it will happen. Yeah. So my view is that because Singapore we don't rely on interest rates, we purely set our SGD against a basket of currency. We are consistently having a surplus. On top of that, I think the past few years, more and more people is trading Singapore as a safe haven uh, country, our currency. So they're going to park more funds in Singapore. So we're going to have lower interest rates, more money to spend, and running more surpluses compared to USD, which is going to have high interest rate compared to us. Uh, they are consistently running a deficit, uh, and overall a weaker political atmosphere for them. Seems like they are just pissing off their allies left, right, and center. And USD as a reserve currency is weakening. I'm not going to say they'll be replaced, but it's weakening, especially by the BRICS country. So I think that personally within next 20 years, there's a very good chance that SGD will reach parity with USD due to the reasons that I've stated above. I think it makes a very good search on AI if you want. I'm using Perplexity. It does support my view. I'm just going to scroll to the very, very last part. Is that look, the conclusion is that it's technically possible But, all right, here's a huge but. Over the next 5 to 10 years, not really, but probably several 2 decades, there's a good possibility. Alexis, what's your counter view on this?
I think my view is not so much counter, but I think with the strength of the Singapore dollar, the government has to be really, really careful because we are not a super large population, right? And a lot of thing is a bit, I think the data I would like to look at actually is very simple. Singapore's unemployment data. All right, Singapore's unemployment data, I think, will be a very strong factor of how the government will react to the Singapore's strength in terms of USD. So I do believe, like how you say, in the long run, maybe 5, 10 years, we might possibly reach a parity. But what is going to happen to people on the income scale where if you have a very, very strong Sing dollar, what are the industries that are affected? The sectors that are affected. Sectors are affecting, and it's really interesting because it's like the sector that you affect most is where people are the highest employed. There's the highest employment number. F&B, hotels, services sector, right? There have to be a flow of people coming in. And on the other hand, you look at technology. Now AI is replacing waiters, waitresses, so already unemployment is already increasing because technology has taken over jobs per se. Factories, manufacturing, Singapore's very small, small services and manufacturing sector, right? It's already affecting that. So if Singapore dollar gets stronger, well, it is good for general imports, right? For us, people are going to be, hey, it's cheaper for us to buy and import stuff. But then the question is, where does my job come from? That I can get employed to earn that money in the first place. So the concern I'll be seeing, I think, would be really to look at where is Singapore's job market going. And a lot of efforts are being made into the government right now to upskill, right? There's whole departments, WSG, for example, Workforce Singapore, that are focusing on how do you get people re-employed, upskilled, staying in employment, employing the elderly, So I think this would be a bit of a key thing to, will US dollar, Sing dollar reach parity? If the education level, the unemployment level can keep up, and not forgetting we also have a huge foreign worker database. So I think it's a very delicate balance. So this is why I would say trading the US dollar Sing is a patience game because there's going to be prolonged periods of time it just goes sideways. So if I just share the chart one more time to just show you I wouldn't say frustration, but more of the irritation sometimes when I have at trading the 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 US dollar Sing is that US dollar Sing is really slow like a snail. When it reaches a certain level, so this is the daily chart, right? When it reaches a certain level, it starts to go sideways for the longest possible time. So this is the weekly time frame. If you go on the weekly time frame, it's a little bit more obvious. Overall, over years and years, you can see the dollar Sing lives in a banded range, right? So over here, this between I think 2015 to 2025, it has lived largely in this space. And all this is, of course, the outliers where, there are probably economic events that pops the currency in one way. But most of the time, the band that the dollar Sing stays in is somewhere over here. And for the first time ever, it's popped here once, popped here twice. And my question then is what is the next range it's going to live in? It has lived in this range during the last economic crisis, post 2008, right? It stayed here for almost 4 years. We have 4 years over here. So the question is it going to stay another 4 years here? How long will it take? And if it does go below 1.26, how long will it get to go there? So this is the part that I think dollar Sing is a little bit tricky because it's definitely a medium-term, long-term range trading. Now the thing is to figure out where is the upper and lower limit. So I was previously pro dollar Sing long because of the swap rates, but now I'm not too sure because you look at the way price is hovering below here. Now I'm kind of worried that I think it's going to touch 1.26. The question is when, and also because it's such a slow-moving currency. If you're going to short dollar Sing with a negative swap, it's not going to be worth it. Right. So the only position to buy and hold for dollar Sing is actually to long, and I can't find anywhere to long right now, even though I want to long. So will it reach parity? Maybe eventually, but to get there, I think it's a very, very delicate balance. It's going to take a hell of a long time because of the way the currency goes in general. But I think the labor market will give us our answer. If the government is able to improve the labor market in Sing dollars, then I think with a generally more stable labor market in Singapore, yes, dollar Sing towards parity, higher probability. But if the labor market cannot keep up with technology, cannot keep up with the upgrades, then I think it's going to take longer because it's such a delicate balance on that level. So dollar Sing not my favorite currency pair at this point. I can't find a way to buy. Will it reach parity? I do believe so because the benefits of dollar Sing parity outweighs a weaker Sing dollar because of its import status. Yeah, so that's my stance. I agree with you long term, short term, I don't agree with you.
All right, I think we'll, Alexis, you seem to be a favorite today. I think we'll just answer one more questions from Rajiv. I think he was asking about swap.
Okay, so just to show you swap. Okay, for all of you, swap. You can also ask Gary on your support sessions. Pick your currency pair over here, right click and click on specification. So this gives the specification of the contract. All right, so right click on any currency pair, go to specification, and then you can scroll down to swap over here. It will show the swap level over here. Swap long short over here. All right, and you guys, if you're talking about gold, I know everybody wants to trade gold right now, but just be careful about gold because it's highly speculative. I think as Paul mentioned, about 80% of people's money, retail money, is in gold because it's just so volatile and so speculative. So if you look at gold chart like this, I also don't know how to trade. On the daily time frame, it looks like this. Is it long? Is it short? You kind of not sure lah. I think gold is really price action. Yeah, price action and see how your technicals. So if you are a very strong technical trader, price action trader, maybe gold can do well for you. But you ask me fundamentally, I give you a big question mark also.
Then to end that, personally for me, gold, I don't really like to trade gold. Technically, I think it's just really overextended. I'm waiting for a good retracement. For the past few months, it has never happened. I'll continue to wait.
Okay,
Yeah,
let's be patient.
I have simply no confidence in trading gold at the moment. That's my take as a technical
Similar,
trader.
very similar perspective to you. Waiting, but haven't reached yet.
Yeah, I mean I can wait, then just reach on other pairs.